I define stagflation as an environment where consumer prices are rising and the economy is contracting. So we've got an official recession, and at the same time, we have consumer prices rising. So it is to speak in plain terms, it is an environment that's just economically miserable.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Hey, one of my favorite guests is back on with us, Dennis Tubbergen. Dennis, author, speaker, really well-known financial advisor, financial expert. I'd say you're a financial expert, Dennis. And you can find him and his free book, which I highly recommend you download, called revenuesourcingbook.com. Dennis, welcome back. So, hey, we're talking pre-call. We both kind of believe that even though Powell overpromised on rate cuts, we're in the middle of an election season. I once read in Barron's magazine, Barron's newspaper, that what the Fed is doing what it does best, which is helping a president get reelected or get unelected if they don't like him. You see this coming?
Well, I think, Kerry, yes. I think even though the Fed is not supposed to be political, those in power have power of appointment. So I think it's very safe to say, no matter which side of the political aisle you may find yourself, that the Fed certainly leans toward the party in power. So I think you're going to see interest rate cuts coming. The hot March inflation report be damned. I think the Fed has one bullet left in the gun. Is the only bullet they've been able to shoot over the past few years or so. And I think they're going to shoot it again because it's the only option they have for an economy that, in my view, is headed for stagflation.
All right. You know, many of you out there don't know what stagflation is. How do you define stagflation, Dennis?
I define stagflation as an environment where consumer prices are rising and the economy is contracting. So we've got an official recession, and at the same time, we have consumer prices rising. So it is to speak in plain terms, it is an environment that's just economically miserable.
By that definition, we've had stagflation for a while, haven't we?
I think so. Yeah. I mean, if you look at the fourth quarter GDP report, these numbers are going to be close, but I think the GDP expanded by about $343 billion, and yet the government added about $850 billion to debt. So if the government was not spending money that they didn't have, you'd find that we'd already be in an official recession. In fact, the government spent $2.50 that they didn't have to get $1 worth of growth. So I'm not sure you could actually even classify that as growth. So yeah, I believe take the artificial stimulus, the artificial spending and debt accumulation out of the economy, and I think we have a recession presently.
So assuming we get a replacement at the White House, can the next president, who will go nameless, can he follow the example of Argentina's president, Milei, and just cut, and dump all these agencies? You think will he do it? Does he have the political will to do it? Because really, we see that Argentina, we can take this bet right now, Dennis, and I'm sure you'll bet with me, not against me. 10 years from now, if they follow these policies, it will be the most prosperous country in Latin America.
100%. I couldn't agree more. And it takes someone with really, can I say big kahunas on your show?
Sure.
I just did.
Well, bleep it if our digital overlords don't like it, Dennis.
I mean, think about that. Here's a guy that came into office, and in 9 weeks, he balanced the budget, and he cut spending across the board 50%. I've interviewed on my program Professor Lawrence Kolikoff, who tracks such things, And according to him, if you have to cut spending here in the U.S. across the board by over 40%, I think it was 41 or 42% to balance the budget. So essentially, the numbers are not far off from what Argentina was dealing with. So there's a lot of fallout. There's a lot of pain that deals with cutting a budget like that. But Argentina had 250% inflation. That's painful too. And if the U.S. dollar didn't have reserve status, I think that we potentially would be Argentina.
Yeah. Yep. And hey, let's go back to the turn of the 19th century going into the 20th century. Argentina's economy was the fifth highest in the world. And then you look at the wealth that was there when you go to Buenos Aires. It's impressive, the architecture. You could be in Rome, or you could be in any first world country. I wouldn't say that Argentina became a third world country, but it certainly dropped from the ranks.
Without a doubt, and it's 100% traceable, in my humble opinion, to policy. When you try to appease everyone, I mean, you can go back to the Roman Empire, and one of the big problems with the Roman Empire is the mantra, we're going to make the rich pay their fair share, started in the Roman Empire. There's nothing new under the sun. These politicians are taking the same playbook, and there's only a few pages in the playbook, and they keep using them over and over, and the outcomes tend to be the same every time. So this is really not a mystery for anybody that studied history.
Yeah, well, you would have to cut social programs, right? You'd have to do something. Well, you'd have to do something about the medical system. All right, because it's just a license to steal from from Medicare and Medicaid. It's turned into that. Does the country have the political will to go through something like that? Because it's like you're giving the kid the bad medicine, and it's, oh, I hate this, but it's good for you. Just drink it down. That's kind of the situation we're in. The cure to most people is worse than the disease because they really don't even understand the disease.
Well, I think that's exactly right. And I tell people, look, we will have a reset. So the question is, do you want to have a reset that is proactive, like Argentina? It's going to be painful, but ultimately the end result is going to be economic health, but there's going to be a lot of pain to get through in the interim. Or do you wait and have a reset that's reactive? And I think that's likely where we end up, because at that point, politicians point fingers and blame things other than the policies that have been enforced. And I think ultimately that's how this plays out. Now, going back to what you said, does the next occupant of the White House, if it's a different occupant, have the political will to get this done? I would be doubtful. I think that that's going to be a very, very difficult thing to do. I think that, he's been in the White House in the past, and certainly he was not afraid of deficit spending. So I think we're going to go to stagflation, and ultimately this reset is going to be reactionary at some future point.
Yeah, I'm inclined to agree with you. But on the other hand, a lot of policies that he tried to enact, he couldn't, because he had everybody around him, sticking daggers in his back. Is like a modern-day Julius Caesar here. But death by 1,000 cuts. So maybe there's some cause for optimism, because we know that he understands gold. We know that he understands inflation, right? Understands all these issues. But the amount of pain that the country has to go through, they're going to go through it anyway. That's what you have to understand. Regardless whether we do it now or we do it later, it's going to have to be done. The IMF, you noted, just issued a warning saying things can't continue the way they are.
Yeah, you've got Bank of America saying that a financial collapse or reset, I forget the term, but they use the term imminent. That means it's nigh, it's coming. And when you look at economic pain, I don't know if you saw this, Kerry, but credit card debt now is approaching $1.4 trillion. So there's more there's more revolving credit out there. People carrying more balances on credit cards than the entire outlay for Social Security annually, to put that in perspective. So you could certainly make an argument that the economic pain is here. Personal savings rate is an all-time low. that tells you how people are dealing with inflation.
Hey, and credit scores, FICO scores, are dropping for the first time in a decade. And this is after they did all this stuff to make them go up, artificial stuff like removing different types of debt, tax liens, things like that. So obviously things aren't great. And then you got subprime auto loans. They're imploding, defaults on auto loans and credit cards up and away. So it's already coming, whether we try to be proactive or not, it's going to be here.
Well, yeah. And I mean, you mentioned subprime auto loans. We don't even know what the default rate is on student loan debt because conveniently that is not going to get reported now until January of 2025. I'm sure it's just a coincidence that reporting is going to start after the election. But last I knew,
Of course,
those numbers were big numbers also. And then when you look at what happened just month over month, housing starts in March down almost 15% from February, building permits down. So you're seeing really housing has the potential here to fall off a cliff. And certainly March numbers were dismal.
Yeah. And yet the home builders are still trading at pretty high prices at or near all-time highs, right?
Yeah, they are for the time being. I think that, I've talked to people whose opinions I respect, and they say watch the home builder stocks because that's the canary in the coal mine for housing. And they haven't quite reacted yet, but I fully expect that they will.
Yeah, no doubt. I mean, yeah, I've been watching these home builders, and they seem to be defying gravity. There's still like a lot of people will not move because, they're at all-time highs now. Lennar, it's up 3.5% today, if you can believe it. And it seems to be defying gravity here.
Well, the old saying is that markets can stay irrational a lot longer than you can stay solvent. So I would say that might apply to home builder stocks here.
Inclined to agree with you. I should say they're close to all-time highs. The all-time high was hit on March 25th for Lennar. They seem to be the bellwether housing stock now. But all of them are in the same boat, right? So, and that seems to be also making the case for lower interest rates, right?
I think so. And the underlying, the bottom line here, in my view, Kerry, is inflation is still the big story. We are a consumer spending dependent economy. Over 70% of the U.S. economy is dependent on consumer spending. And inflation is really making a lot of that discretionary income evaporate. And all you need to do if you want to know what the real inflation rate is look at what gold has done. As we see housing starts fall off, we have gold now at all-time new highs. I'm expecting we might see a little bit of a pullback here, but I think we're just getting started here. And rate cuts, I think, are just going to add to the bullishness that I feel for that precious metal sector.
Correct. As we speak now, on Kitco, gold's at $23.23 and change. It's only down $3.50 today. It started out, it was a double-digit loss, over $10. I think last night it was up to 20 or 30, and now it's making a comeback here today. So everything seems to be pointing to the stagflation, lower interest rate environment. I mean, look, the banks, what about the banking crisis? That hasn't gone away, has it?
I think that what we saw last year was the beginning of what we're likely going to see this year. The statistic that I find very ominous is the fact that we've got about $1 trillion in commercial real estate loans that are resetting here yet this year. They're going to reset at much higher interest rates, and we've already seen statistics of the lead Canadian pension fund selling their interest in a Manhattan office building for $1. The tallest building in Brooklyn now going up for a foreclosure auction in June. So you're seeing commercial real estate, I think, is really going to lead this this collapse, if you will. And I expect that residential real estate will follow suit to some extent, and I expect stocks will also follow suit.
Yeah, and you look at the tens of millions, hundreds of millions of square feet of office space, it's virtually empty or highly underutilized. And it's just big companies waiting for their leases to end, right?
Yeah, Michael Snyder had an interesting piece that he put together from various articles out there. When you look at the downtown areas, he focused on St. Louis, comparing St. Louis from the time the World Fair was there about a century ago till now. But San Francisco, New York, granted, the work from home trend has made it tough for commercial real estate, but so has unenforced crime in a lot of these big cities. Nobody really wants to be there, and you have this movement away from big cities to more rural areas, and it's a cycle that feeds on itself. The worse it gets, and I think that's going to contribute to the demise of commercial real estate as well.
Well, we've got the phenomena here, Dennis, of failing states and failing cities, right? And there's a reason why people are leaving certain states and going to others, right? So is this going to eventually lead to the breakup of the United States?
Well, I can think of several mainstream news sources that have published what I would consider to be credible people talking about secession. I don't ever recall seeing that up until the last few years. You've got the whole movement out in California, and you've got citizens that are just fed up with a lot of these policies. And once it starts to affect your pocketbook and your lifestyle and your family, people start to wake up. And I think that's happening.
Yeah, so political realignment, and not so much between the parties here, really, but just a kind of awakening to things cannot keep going the way they're going. It's unsustainable, and a crash is inevitable.
I think the crash is inevitable. I'll be very interested to see how the rest of 2024 plays out. I don't think we get through this year without more significant issues in the banking sector, like we just discussed. I think you're going to see real estate do poorly. I think that the Fed may take some action, as we talked about here in June. I think we're in agreement on that. But the Fed also has been known to help pump up the stock market. When Richard Fisher retired as Dallas Federal Reserve Bank president, he did an interview shortly after he retired and said, yeah, we dumped $1 trillion into the market. We were looking for a wealth effect from juicing the market. He said we juiced the market, but we didn't get the wealth effect. So there's precedent out there that a lot of these markets can be manipulated also.
Yes, so true. And but I think we're getting to the end of fake money here, what it can do to really boost an economy and boost the market.
Yeah, I completely agree. And I think it'll be interesting to see if the Fed does try to cut rates, how will markets react? I mean, when you look at what's happened just to the yield on the 10-year U.S. Treasury note this year, interest rates are up because the U.S. is not the credit risk they once were. So I think the Fed's going to be faced with becoming largely the buyer of last resort for a lot of U.S. Treasuries if this deficit spending continues. And every indication has me believing that it will. And that does nothing but accelerate this stagflation cycle.
Yeah, correct. No question about it. And it's a bit scary. So when do you think the inevitable interest rate cuts are coming?
I think sooner rather than later. I would say the over-under is June.
Okay. I'll buy that. It could be a little earlier, end of May. If the economy really starts falling off a cliff, they're going to panic, right? Like they always do.
Well, and they're going to do the only thing that they can do.
Print money.
Like I said, is the only bullet they have left in the gun.
Yeah. So, hey, what are three things Joe Blow, as a certain Michigan liberal movie producer, director would call them? What should Joe Blow, Joe Sixpack, and Steve Chardonnay, what should you be doing?
Well, I would certainly own assets that cannot be printed. So my favorites would be silver 1, gold 2, maybe agricultural real estate 3. Those have been my favorite asset classes for probably the last 6 months. They remain so. Think tangible. Think about things that cannot be printed.
Crypto?
I wish I would have bought crypto.
You and me both.
Crypto became a thing. I did not. I still lean towards tangible. I think I lean a little bit more old school. I'm a big believer in what Voltaire said in I think it was the early 1700s, that all currencies eventually return to their intrinsic value. I think of cryptos as well.
Hey, so, there's this thing coming up with Bitcoin called the halving.
Mm-hmm.
What if we did that with fiat currencies? Like, you're only allowed to print up so much, and then every 2 years you have to cut the amount you're printing by half.
Well, Kerry, if that's your platform, you have my vote.
Well, hey, I think we need a halving for the U.S. dollar, right?
Could not agree more.
Hey, so are central bank digital currencies inevitable? Is that what we're going to be left with?
I think that is the dream of a central banker. It's the dream of a politician, because I think it's more about control than anything else. I am skeptical that they're going to make that work on a widespread basis, simply because I think that whenever you look at currency changes historically, you look at John Law's France, for example, that pops to mind. And I think there's a lot of very similar circumstances today as compared to France in the early 1700s. And whenever you have a currency change, you typically have two currencies circulating at the same time, so people get used to it, and then you can pull away one. So, for example, with John Law, they had claim checks or paper currency that could be redeemed for precious metal. That's not the only time that's happened, but once it circulated and people got used to the paper currency, they pulled the coins containing precious metals out of circulation. I think to implement a central bank issued cryptocurrency, you're going to have to do the same. And I'm wondering if there's time to get that done without an uprising from the masses. I think that we may see currency changes more quickly than that can be implemented.
Yeah, it's interesting though, because people just don't carry cash anymore, Dennis. Because every day it's less and less. Even myself, big proponent of cash. I carry cash, but I don't use it much.
Yeah, I carry cash, and I probably use it. I use it less than I used to, but I probably still use it for about a third of my transactions. So I realize I'm a dinosaur here, but there are a lot of people out there that use cash. Not as many, I agree, and certainly I think that's generational.
Yeah, for sure. My kids' generation, they just don't really understand the benefits of cash. Hey, they don't listen to me, but what else is new there? Kids never do. But the cashless economy, it just seems to go more and more every day.
Agreed. I guess I'm not sure we're quite there yet. Because of my top three, you might paint me as a little bit old school, and I certainly wouldn't argue with that. But I think we're a little bit away from a cashless economy. But I'm not right all the time either.
Hey, when the casinos in Vegas stop giving out cash, then we'll know we're there. Because that is one place, Vegas, where cash is still king. And I've been to other countries where they're not as far along in electronic payments as the West. Places like Colombia, it's cash economy. Thailand, Southeast Asia, they're really into cash. And, they've got the same inflation going on, worse inflation in Colombia, and they're still hooked on cash. So, interesting thing. Hey, just tell us again where to find you, Dennis, how to get your book again.
Yeah, you can go to revenuesourcingbook.com. And Kerry, we'll even send a paper and ink copy of the book out. So you'll get the real thing when you go to revenuesourcingbook.com.
Wow. Well, you are a dinosaur, aren't you?
Yeah, paper and ink. You can dog-ear the pages. You can write notes in the margin.
Dead trees. It's so 20th century. All right. Well, hey, you got a question for Dennis, myself, shoot me an email, kl@kerrylutz.com. And a link to Dennis's site is on the show notes to this interview on financialsurvivalnetwork.com. And while you're there, please go sign up for your free newsletter. Dennis, always a pleasure, always enlightening. We'll talk to you again real soon.
Thanks for having me, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.